Two people, same age, same health, same exact amount of coverage, $500,000. One pays $28 a month. The other pays $61. Same protection, more than double the price. The difference isn't luck, and it isn't their health. It's a series of small, completely controllable decisions the second person never knew they were making. Today, the cheapest legitimate way to get life insurance in 2026 without cutting a single corner that matters. This is Policywise, insurance explained honestly. Rule 1, and it's the biggest lever by far. For almost everyone trying to spend less, the cheapest meaningful coverage is term life. We've covered why in detail, but here's the short version. Term gives you a large death benefit for a small premium because it's pure protection with no savings component bolted on. If your goal is the most coverage per dollar, term is the starting point, full stop. Choosing whole life when you only needed term is the single most expensive mistake in this entire video. It can multiply your premium by 5 to 15 times. Once you're on term, here are the dials that change your price. Some you control, some you don't. Lever 1, your age, today. Life insurance gets more expensive every single year you wait because the risk to the insurer rises with age. The cheapest policy you will ever be offered is the one you buy now versus next year. If you've been putting it off, that delay has a literal price tag. Lever 2, health. Insurers price you on weight, blood pressure, cholesterol, nicotine use, and family history. Two things matter here. First, nicotine is the giant one. Smokers can pay roughly double. Many insurers will reclassify you as a non-smoker after you've been nicotine-free for 12 months, which can slash your premium. Second, if you're planning to get healthier anyway, locking in a policy before a diagnosis is wise, but never lie on an application. A misrepresentation discovered later can void the entire policy when your family needs it. Lever 3, don't overbuy. We did the dime formula in an earlier episode. Buy the amount you actually need, not a random round number that's bigger than necessary. Every extra dollar of coverage is a dollar of premium. Lever 4, match the term to your real obligations. A 40-year term sounds safe. But if your mortgage is paid and your kids are independent in 20 years, you're paying for coverage you no longer need. Pick the term that ends when your big financial responsibilities end. Here's the part that quietly saves the most money. The exact same person gets wildly different prices from different insurers because every company underwrites risk differently. One insurer may be lenient on a certain health condition. Another may penalize it heavily. Buying from the first agent who calls you is how you end up overpaying. The cheapest route is to compare multiple insurers for your specific profile, either through an independent broker who isn't tied to one company or an online marketplace that quotes several carriers at once.
And in 2026, the online direct-to-consumer channel has genuinely lowered prices for healthy applicants. Several digital-first insurers skip the in-person medical exam for many applicants and pass some of the savings on. For a healthy person, an online no-exam term policy can be both cheaper and faster. If you have complex health history, a human broker who knows which carriers are friendly to your situation can actually beat the algorithms. Now the honest counterweight, because cheap done wrong is expensive. Avoid these traps. Don't pick a flashy, no medical questions, guaranteed issue policy unless you genuinely can't qualify otherwise. They're priced high precisely because they ask nothing. Don't drop your coverage amount below what your family actually needs just to hit a lower monthly number. Underinsuring is the most expensive saving of all if the worst happens. And don't let a policy lapse to save a payment. Losing years of coverage and having to rebuy at an older age costs far more than you saved. Who should act on this today? If you're in your 20s or 30s and healthy, this is your cheat code. You will literally never be offered a lower price than right now. Lock it in. If you're a smoker or recently quit, the nicotine question is your single biggest lever. Note your quit date and shop again once you cross 12 months. If you were quoted whole life and it felt expensive, get a term quote for the same coverage before you sign anything. The contrast is usually dramatic. If you have a health condition, don't assume you're uninsurable or doomed to high rates. An independent broker shopping multiple carriers can find the one that treats your situation kindly. The cheapest legitimate life insurance in 2026? Start with term, not whole life. Buy while you're young and healthy. Quit nicotine and reshop after a year. Right-size your coverage and term. Compare multiple insurers instead of buying the first quote. Use online no-exam options if you're healthy, a broker if you're complex. And never save money by underinsuring or letting a policy lapse. Same coverage, half the price. That's the whole game. Next episode, your mortgage lender really wants to sell you a specific kind of insurance the moment you buy a home. Is it smart protection or an overpriced scam? We put it on trial. That's next. Subscribe for one honest insurance breakdown every week. This is Policywise. General education only, not financial advice. Talk to a licensed professional before you buy.